to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. This week, a big one of commemorations. Last week, actually late in the week, the Titanic, the 100th anniversary of its sinking off of Newfoundland, 1912. Also in 1912, the first game played in Fenway Park. First game between the Yankees and the Red Sox, as a matter of fact. This weekend, of course, it's going on in Boston. Some great moments and games have passed. We've got Don Zimmer being manhandled by Pedro Martinez. Great way to throw a 72-year-old man to the turf. And some other melees in the storied history of the Yankees and the Red Sox. Other types of seasonality that we like to talk about here. Earnings season going on right now. This guy, Jeff Immelt, doesn't look too happy right there, but the CEO of General Electric should be happy. His company topped EPS and sales estimates for the first quarter of 2012. Stock was up about 1% today, going up to darn near $20, $19.34. General Electric, these guys were hamstrung down to around $8, 7 and change in the big recession. The big debate: do you get an Apple? Do you get a Mac? Or do you get a Mac? Do you get a PC? Well, for today, at least we had one winner. The winner was Steve Ballmer, CEO of Microsoft, out with earnings. The stock shot up a little bit higher. This is actually just a picture of Boris Yeltsin dancing, but the two are rather similar here. Mr. Ballmer, very energetic figure. Here we are, Mr. Softy, MSFT, Microsoft, up to $33 per share, nearly. First time it's been there in about a month. These are pretty close to multi-year highs, though, for Microsoft, a stock that was down around $24 last summer. So nice little gain there of 33% in Microsoft, squeezing out a nice quarter. Of course, you can't go anywhere without learning about Apple Computer. Apple comes out on Tuesday, the 24th of April, with earnings. Tim Cook there with the release of the iPad, the announcement a couple months ago. Apple selling is taking it down to the 50-day moving average, just squeezed like an apple. But the 50-day average, folks, is where stocks that are in strong uptrends like to rest before they kind of get back on the road, kind of like a rest stop, like a McDonald's on the interstate. So it pulled off into this McDonald's, and distressingly, though, a little bit of money's coming out of the stock, but strong stocks that pull back to the 50-day average, as Apple has here, tend to rally. And what could be the catalyst for that rally? Maybe earnings next Tuesday. We'll see just about that. There's an old saying, of course, in this country: as goes General Motors, so goes the nation. And the idea was that the manufacturing base of the U.S. was the strength of its economy. Oh, Uncle Sam, you got yourself an iPhone, I see there. Looks like a iPhone 2. But in any case, right now you could argue that Apple, as so goes Apple, so goes the United Nations, or the United States. Apple is now 20.5% of the QQQ. That's the exchange traded fund that tracks the NASDAQ 100. 1/5 of it. So they're going to rebalance it down to 12.3%. Apple just got too fat for it. So when you were buying the QQQ, you weren't buying a slice of the technology sector or big cap tech stocks necessarily. You were buying mostly Apple Computer. It's 4.5% of the S&P 500 or the SPY ETF. So Apple, whether it does well or it does poorly on Tuesday with its earnings report and the stock goes up or down, will affect you if you own stocks of any stripe, pretty much. If you want to avoid that strong concentration in Apple, you could get away from it in the index by going with the RSP. It weights everything in the index equally, as opposed to giving it a bigger weighting for the company. Of course, Microsoft, Qualcomm, Apple, things like that will be very big. Back to the earnings front next week, we also have Baidu on Tuesday. Baidu, of course, is the huge Chinese web portal. The stock has been an absolute monster, up more than tenfold since the Great Recession, 2009. It's around just shy of $150 per share. Look at the stock right here, 144, 147 is where the 10-day average is. It perked up. Couldn't get above 130, but when it did, it got a nice little head of steam, forming a new base here. Earnings due out on Tuesday. Could be setting up for something nice there in Baidu. Also, of course, on the 26th, we've got Jeff Bezos and Amazon.com. His company pretty much sat out the entire rally from the fall until now. But the stock is strengthened somewhat. It's got a good little foundation. It's building a base. Maybe, just maybe, something will come out of the earnings report next week that's good for the stock. It's about time for Amazon.